why you should not do an ARM loan. Hi, I'm Amber with Guild Mortgage, and I am excited to talk to you about ARM loans. So sometimes people will look at an ARM and say, what is that? It's called an adjustable rate mortgage. And what that means is that sometimes you're going to see like a 3-1 ARM, a 5-1 ARM, a 7-1 ARM, a 10-1 ARM. There's a lot of different ARMs. And how it's done is if it says it's a 3-year ARM or a 3-1 ARM, that rate that you're going to get is only fixed for 3 years. So typically what happens is over a 30-year period, you're going to have the rate fixed for 3 years and then it'll adjust for 27 years. Or if it's a 5-year, it'll be fixed for 5 years and it'll adjust for 25 years. Now what that means to you, and sometimes people will look at the rate and be like, well, I want the lower rate. But here's where the problem lies in an ARM. And I can give you a personal experience on this. So I think it was my second house that I purchased. The ARMs were a really popular thing in the early 2000s. They were a really popular thing because they were given very, very nice pricing on the ARM loans. So at that time, a lot of people would do the 2-year ARMs and then it would adjust for 28. But what happened is that once we got to the end of 2 years, the mortgage meltdown happened. When you're doing an ARM loan, after the fixed period is over, the rate's based off of what's called an index. And the index moves up or down depending on what's happening, kind of like in the stock market, right? So at that time, when our 2 years was up, the market was crazy and our rate would have went from, let's say, 6% to 8%. Well, we were in trouble because that put us to a point where we couldn't pay our payments. So then I tried to go in and I tried to refinance my house right before it was up. But what happened is the market had dropped and my house wasn't worth what I had paid for it. So there was nobody that would give me a loan. So we had this loan that we couldn't refinance out of, and I had signed terms that said after that 2 years, it'll start adjusting. So we were kind of in a rough spot, and it put way too much stress and anxiety on me and my family than it should have. So I'm not the biggest fan over ARM loans. There are some benefits in it if you're going to stay in the house short term. So say if you're only planning on living in that house 2 years and you do a 3 or 5-year ARM, then you might benefit from that. But if this is a long-term purchase, my suggestion would always be 30-year fixed, because you don't have to worry about refinancing later. The problem with refinancing later is that the rates are at a certain level today, right? In 3 years, when that ARM adjusts, we could be dealing with higher interest rates. And then even if you refinance, your rates can be higher than what you currently have, depending on where the market's at. So there's a lot of uncertainty when you're talking about ARM loans. And to be honest with you, the rates are not a whole lot different than what fixed are. In today's market, the rates are pretty similar to a fixed, so it's not benefiting you much at all to do an ARM loan. Anyway, I hope this video was informational for you. If you have any questions, I'm happy to look at your situation individually for you. Please reach out to me. I'm going to leave my phone number. You can call or text me, or my email address on the screen. And feel free to reach out to me whatever way works best for you. I would also love you so much if you liked and subscribed to this video. And thank you. I hope you have a great day.